if necessary, throughout a whole market cycle. If you happen to buy it at the peak of if you're buying a common share and you buy it at the peak of a bull market, you may have to wait for the peak of the next bull market. But you will make more money by doing that than you would if you tried to predict and were wrong in some of your predictions. We have been working at Investment Council for 45 years, Joe, and we have never found any method to predict when the cycles would change that's accurate more than 60% of the time. And we have never found any other organization with a record as long as 10 years in predicting market cycles that was right more than 60% of the time. And consequently, it's not wise to use that method. Don't try to predict the cycles. Instead, put your money in whatever is selling at a very small price in relation to its true value, and then wait patiently for it to be recognized by other investors and bid up in price.
Well, in your case, of course, that strategy is obviously proven to be absolutely correct. Now, what about the average investor? Even if he does his research, there are a lot of investment analysts that say one of the big mistakes that people make is not admitting that they actually made a mistake in a stock, and that they'll second guess it. It'll decline, and they'll say, well, everything's still all right, I'll hold in. Declines a little bit further, and then they start to get worried, and then they're really starting to sweat, and then they say that the usual psychology is, well, I think as soon as I can break even, then I'll get out, right? But then it declines lower and lower, and then they panic at the very bottom and get out. So what does a person do?
We think that if a person is just doing it for fun, they could try to do it themselves. But if they're really doing it to make a superior investment performance, they haven't much chance to make a superior investment performance if they're working only in spare time, as compared with an organization like ourselves who works full-time and has a large staff of chartered financial analysts working constantly. It would be truly surprising if some individual investor could make a better long-term performance than our mutual funds do.
Even though your method has been very successful, do you ever think to yourself, well, gee, with the high inflation we have now and the volatile economy and the cycles and stocks seeming to be shorter and the roaring inflation, the government, the increased government control, and all the other factors that we have now, that the method that you've used may have to be modified or may be totally voided over the next decade or so?
One of the few things you can depend on, Joe, is that no investment method is going to be permanent. All investment methods will become obsolete, especially if they become too popular. When too many people are using the same investment method, it's already reflected in the market prices. So you have to continually seek for new investment methods in order to be in that method that other people are not using. The long-term success in investing depends on changing your method and changing from the method that has been most successful in the past into one that would have been least successful in the past in order to get into the one where there's not any competition.
Do you think your method is still unique, or have you modified it in some way?
We've modified it continually for 45 years. We've continually had to modify our methods numerous times in order that we can try to stay ahead of the other security analysts, because there are lots of intelligent security analysts, and they're always adopting new methods. And when we talk to people like you and explain our methods, other people adopt them, and those methods then become obsolete. Once they're too popular, they're no longer useful, and we have to find new methods.
Right.
So at any given time, we are experimenting with at least 5 and often 10 new methods to see what type of new method we will find best for the next cycle.
What are you doing that's different in planning for the next 4 to 5 years?
We are studying every day and every month. Actually, at present, 8 different methods that we may decide to use for the next market cycle. But the last thing I would do is to tell you what they are. Because the success of them depends on having other people not use them. Out of all the different ways to select investments, the one that has lasted longest and probably will in the long run be the most likely long-term investment method is to buy the stock that